Welcome back to the Smart Money Bootcamp. My name is OZ from OzFx, and today we are going to be going over liquidity. And in my opinion, liquidity is one of, if not the most important components when it comes to trading smart money concepts, and that is because liquidity is literally everywhere in the market. The entire market itself is just liquidity. One thing I like to say is see the liquidity or be the liquidity. But in Forex terms, what is liquidity? What is liquidity in the market? Any point in the market where orders are stacking up, how can we spot it? Equal highs and equal lows. Equal highs and equal lows are just one of many ways to identify liquidity, and it does not stop there. It's just the easiest way to spot it. In most cases, we use liquidity as our targets. The price algorithm is typically drawn to liquidity. And as you can see over here, you can see I have a drawing that I made just kind of representing liquidity on both sides of this, because the market is making multiple touches on each side. Like down here, you got 3 drives into this, and now a 4th drive about to happen here, and then a triple top up here. And the reason this is building liquidity is because people are waiting for the breakout. There's people selling at the top here, people buying at the bottom here. Orders are stacking up on both sides of this. Liquidity is more than just equal highs and lows. Ultimately, there's liquidity all over the market. There is literally liquidity sitting under and above every single high and low in the market. So every single fractal, there's liquidity there. Every single rally, if there's a fractal underneath that, there's liquidity there. There are points in the market, there are more points in the market that are more significant and have liquidity resting around them. For example, daily, weekly, and monthly highs and lows, as well as session highs and lows. These areas are going to have, I wouldn't say more liquidity, but then again, I guess you could just say more liquidity. Key highs and lows are going to be more important than others. And consolidations equal liquidity. Consolidations equal liquidity because within the consolidation, opinions are being formed on which way price is going to break, and it's stacking up orders on each side of the consolidation. In this example, you can see I have liquidity building up on both sides of this consolidation here. I also have noted the previous day highs and the previous day lows. Pretty much everything I just talked about on the slide before. You can see now, keeping in mind that this is just a sketch, that price quickly took the highs of this consolidation and the lows of this consolidation. It came up, took it, came down, and took the lows. And that's very common. In this case right here, you need to determine your directional bias or your daily bias to determine on whether you were going to sell from either this area, or if this was just going to act as liquidity as well. Maybe this was a liquidity sweep down here. Maybe there was an order block over here, and now this is just going to continue to the upside if that's what the daily bias is, or if we're bullish. This drawing here is actually a setup that you can use to trade, and hopefully by the end of the Smart Money Bootcamp you will be able to trade this example. So an easy way to spot liquidity: when looking at the market, try to look at areas you think traders previously bought or sold at. There's liquidity there. Technically, there is liquidity sitting above or beneath every fractal, but determining which ones are important is key. Time and price theory is one way to identify key highs and lows. Like I said, session highs and lows, daily highs and lows. That is all stuff that we are going to cover later down the line. Let's look at some charts. Alright, so I just pulled up AUD/USD and I'm on the 15-minute time frame, and I'm just going to start and we're just going to look for liquidity. That's the easiest way that we can do this, because honestly, when it comes to liquidity, and I guess practicing liquidity, the best way to do it is to just look at your charts every single day, mark out equal highs and equal lows, mark out anywhere that you think there is liquidity, and watch what happens. Does it get taken? Does it get swept? Is it respected? When is liquidity respected? When is liquidity taken? All these types of things. If you just start to watch how liquidity interacts with the market, that's the best way that you're going to learn. So the first thing that I see here is there is liquidity here. Now this isn't completely equal, but this is relative equal highs. Okay? And then I also see liquidity right here. And what happens to both of these areas? Liquidity is made right here, comes back down, creates even more liquidity, and then what happens? Goes up, takes all these highs, comes down, takes all these lows. Pretty much what I just drew in the previous drawing. And as this came down and took these lows, it came into the order block that is right here, and then came to the upside and took the liquidity that was above this. This was called buy side liquidity right there. Okay, and now what do I see over here where price is currently at? I would draw this right here. I would say this is an area of liquidity building up, because this wick came down and respected this level as well, creating what some traders would call support. But I would almost be willing to bet that this is going to get swept. Now this was, at one point, this was a build up, but it already kind of started to take it, and stuff like this will happen all the time as well. Now let's go back and just look at this chart a little bit back here. Alright, I'm looking around. What do I see? I don't really see a whole lot in here, honestly. The only thing I really see on this spot right here would maybe be this. That's a stretch. It gets taken out all the way over here, which that could have been the build up, this accumulation here to blast through that area right there. Let's go down, let's look at it over here a little bit. Actually, let's go to the 1 hour time frame now, see what we can find here. So one thing that sticks out to me is this area right here. This is something that I would call relative equal highs. It blows through it, comes down, and takes out all of this trend line liquidity right here. Because although we didn't cover it, there isn't a thing called trend line liquidity as well, which most retail traders trade off of trend lines. In my opinion, as soon as a trend line is obvious, that's when it's going to get taken. That's when it's going to get manipulated. As soon as you can see that trend line, that's when it's going to get disrespected. So liquidity takes it, liquidity on the trend line takes it back here. So something I see is this level right here. So I see this support right here, this support right here, and then this coming down and kind of bouncing off of it right here, and then ultimately this takes it all and rallies. There would have been liquidity above this right here. That's another area, equal highs. It also created equal lows right below it. They're not completely equal, but they are relatively equal. Right here would have been another area of equal highs. Now, one piece of advice I can give you to when it comes to looking for either just equal highs and equal lows is don't forget to look at the wicks. There's a lot of equal highs and equal lows that are easily missed because people forget to look at wicks. Like right here, I see some right here. I see another one right here. And then I see something right here. I would almost draw that like that just to connect it. And then even this whole area right here. Remember how I said consolidations can be liquidity? This entire consolidation here was just a buildup of liquidity on both sides. I'm going to draw a simple pattern really quick that most smart money traders use. And I don't want you to get in the habit of just looking for patterns, because patterns don't always work. A lot of traders will get into the habit of trading patterns and then just trade patterns without even knowing why they're trading the pattern. They're just blindly trading the pattern because they see it come up on the chart, and then they trade it without really knowing why they're doing it. They just see the pattern and they do it. But for the purpose of liquidity, it fits in with this demonstration that we're doing right now. So pretty much like this right here, you got a consolidation going back and forth, right? And then so you got liquidity up here, liquidity down here, and then it takes the highs, takes the lows, and then typically what happens here is there's an order block left behind up here. It comes up, mitigates that order block, and then comes down. If you've researched smart money at all, you have probably seen this pattern right here before. It's very common. If you go and look on YouTube, just type up smart money, you will end up seeing somebody show you this pattern at some point. It's literally just a buildup of the highs and the lows, a sweep of the top, sweep of the bottom, return to the top where the orders are left open, and then boom. So we'll just look at a couple more examples here. So if you look here, I had one drawn right here. Let's actually go to the 4 hour and see what that looks like. Yep, right here. So this is one that I previously had noted. This was some equal highs that I had all the way in here. This was a big liquidity pool that I had here. There was all kinds of liquidity just resting underneath this entire area here, and ultimately it blew through it. And then like right here, this could be another way to look at liquidity. See here, that's definitely liquidity that hasn't been taken yet, something that could definitely happen in the future. I also see another trend line forming right here. AUD/USD has been going up for a while, no telling when it's going to fall. But another thing that I want to point out is every time it makes a high in the market here, that's liquidity for the market to later run through. It's like this, just like this. Liquidity to later run through, liquidity to later run through. Even some equal highs right here. So this high and this high, this was even more build up right here. This stacked even more orders up here. And why is that? Let me take you into the logic of why this built up even more liquidity. So this sat a high into the market, came down, it broke some lows right here. We broke some lows, and then we started rallying up, and then we make a high right here, and we sharply fall. Okay, that made even more sellers come into the market. More sellers came into the market here that were already selling over here. There was still sellers over here. And then when this happened, this created even more sellers. So when this started coming up, more sellers probably started to funnel into this market, creating even more liquidity up here. And then it all just smashed through all of it. So I think I'm kind of going to start beating a dead horse here. I think you should be able to understand the concept of liquidity at this point. Right there, that's somewhat... you fix that line up however you want. You could maybe ignore this wick. I also see some liquidity over here. It's not hard to spot. It's very easy to spot, but if you want to practice this, just do what I just showed you. Go through the chart, look for equal highs and equal lows. It's not hard. They don't have to be completely equal, because if you see 2 points set into the market like this that are very equal, you can tell that this came down to around the same level as this, just like this one right here. Boom, another one. They're not completely equal, but they're relatively equal. Just like I could even do this. Boom. That's even more liquidity resting below right there. There's literally liquidity everywhere. One way or one tip that I can give you when coming to liquidity, or how can you incorporate liquidity into your trading right away, is when you open up a chart, when you sit down to trade for the day. So say it's the New York session, you sit down and you want to trade. Mark up your order blocks, mark up your imbalances. We haven't gotten there yet, but we will. Mark up everything that you want to mark up, and don't forget to look at where is the liquidity. What is the next draw on liquidity? And what I mean by that is, where is the market going to go to because of liquidity? What liquidity is the market reaching for today? Okay, so that's one tip or one concept that I want you to start to incorporate into your trading. Start thinking like that. Where is the liquidity? Until next time, guys, I'll catch you later.